Let's see. Good morning, everyone, or at least the people are that already in. Good morning, Astrales, Mel, and Westervries. Good to see you again. Let me quickly share it on X as well. I think that works. And here. Okay. I think everything works. Welcome, Astali, as well. Good to see you. Giving it some time for people to join, but we have super interesting price action across all the assets, like BTC, interesting, gold, super interesting, the S&P, super interesting. So all charts I wanted to go over. And then yeah, I've been scalping today quite aggressively, but yeah, doing super good. We will first zoom out and erase this wall. So, gone with that. Welcome, Bran, as well, and Slatan as well again. Good to see the same people joining every time. Let's give it 2 more minutes and then I will go over BTC to start with, as always. Then the S&P, because S&P had a big influence also on why I took some riskier shorts. Then gold. Gold has been super interesting, but now also falling back very deeply. So this is mitigated. It was, of course, already demand. Now I think that, look, I don't like this heavy drop at all after the break of structure. So I know that we have, I believe it was 5. Like if they totally want to screw over everyone, then they can come for this extreme demand. And potentially bounce even from there, where we had inducement of that 5-minute demand right here. Inducement higher. Everyone that was impatient did not wait for structure or confirmations, got stopped out here. Now a lot of people have been stopped out here, and probably everyone will be stopped out below this low. So I'm gonna set alerts here. And I always also look from what happened from the upside, and that's we created supply. So for me, price is now stuck between this demand and that supply. So also putting alert there. But let's first go over BTC. Welcome, Sido again. Good to see you. And Kijol's dead. Also good to see you. So let's clear up the chart and then go over what happened for now this week, because we have been in a pretty choppy environment since we grinded up and then we entered this range. But we have been seeing like low time frame models literally everywhere. And yeah, there were so many trading opportunities. So it's crazy. So first of all, we had that 1, 2, 3, that model, like not really a model 1, but more of a tree drive where you got that exhaustion into the third tab, which was very similar to the model 1, but here on ES, how it was more clear, because also here you had structure confirmation from left to right. Let's see. Then we had that move down, where we basically had our 1, 2, 3, and also internal 1, 2, 3 with a super nice return to zone, where the entry came right here. I missed the entry. Then this was yesterday's stream where we had that like ranges are everywhere, where we entered this range because this was during New York, and then we had that expansion higher with our range high and a range low. And then I said I wanted to see price take out that range low, preferably into this demand below for a long. But unfortunately, I did not have a structure confirmation because price came into it with low, lower high, lower low, and then here you had your break. However, you should always ask yourself, where in the range am I? Am I in extreme discount or an extreme premium? So in the middle of the range is just a no trade zone for me. So I'm not gonna long it here and then target the range high. It's like 1R, that's not worth it. So at that moment I marked out this demand. If we would come back into that demand after the break of structure, then this would have been a zone where I looked for structure and then along, but price did not give it. And instead it went from a range low sweep to a range high deviation. And then here was kind of a sketchy break. Yesterday in the chat we discussed it because on the 5 it's like an inside candle, so you cannot say that it's valid structure. However, I don't stick myself too much to time frames. For me, it's more, is there structure on any time frame, then I use it. But here, if you look at 3 minute, it's weird. On 2 minutes, it's also more of like a, yeah, just a slow grind up, but not really structure. And on the 1 minute, was it structure on the 1? Yeah, on the 1 you kind of, you have like 3 candles down and then up, but still it's a bit of sketchy price action. But eventually it was indeed a break of structure because we broke it, came back for this supply mitigation, and then slowly sold off. And then very slow price action later in the New York session with a redistribution later on, right here. So price from here is trending down. Low. So then you can pull your range from this low to that high. Let me clear up this. Then you have range low, range high. Tap 1, tap 2, tap 2, and then eventually here the deep tap 3 with your breaker structure right there. And then you can see that if you did not get your confirmation for this deviation, for the structure to play like just a model 2, or like just a range deviation, because if you don't always need a 3 tapper. If you come into it with structure like this, and then you break structure down, then you can also just enter, and then this is your deviation. However, here this structure was pretty sketchy, but then often you can think, oh shit, I missed my trade, I'm gonna do stupid shit, or I'm gonna just wait, because if the market is intended to go lower, then oftentimes you will still get a redistribution, which you had here, 1, 2, 3, break, and then a sell-off, and then your target should not be this range low, or at least from your local model your target is this, but with the bigger context where you play this deviation rotation to the other side, and especially with all this sell side liquidity, you can let your target run to the main range low. So then your invalidation is that high, your target will be the low, and then that's still 2.5 R, which is super nice. And then price came back in the range low right here, where we had demand. We had, what was it? Was it 5? At least it was the range low. So here, again, I was looking at it from this high and then tap 2, but they merged together. So then this is your low, this is your 2, and this is your potential 3 for your model 2. So this morning I was interested in longs. And here it was, again, super low time frame, because what we had, it's basically, let's erase the range. We're low to high, so I draw everywhere my ranges. So here you have low, high, low. Then you can put on your deviation threshold. And then here you can see that after this move, so you have low, high, low, break. This is your breaker structure. That means that you likely go to your range high. And I was looking for potential accumulation here. Like the picture perfect would have been if we made a new low into this demand for model 1. But you did not get it. But instead, price started to break above the deviation threshold. And then a mistake you can make is that you stick to, I want to short. But that's why your range is not just a range. A range is your market structure points. Your low is your market structure low, and the high should be your market structure high. Because if we look at structure, you have low, lower high, lower low, lower high, lower low, SFPing the low. Therefore, this is your market structure high. If you SFP a market structure low, then the high that brings you into that low is a weak targeted high. So that means that the price is very likely to return to that level. So at that moment, this is your market structure high, which means that you break your structure to bullish right here, in which this whole range becomes range demand. Range demand is this range demand right here. So you have range, move out, mitigation, or initiation, mitigation, retest of the range demand, continuation. So in this zone, I was looking for longs. Let's see. But we had a long right here. That was like a lucky scalp with a quick win. But we marked out the 50-minute demands. Let's see. Yeah. So basically this whole range is range demand. So any move into it can be for buying. However, you can refine it more. But that's why I often say don't refine it too much, because then you're more likely to miss out. This is demand, and also this demand right here. So I marked out these two zones as my level where I wanted to see price move into for a long, but price front ran them like by an hair. So there was no entry. I'm not sure if we get structure at all. No, there was no structure until like here. So then this was your breaker structure. Then you know that you are, demand is in control, because we broke this range to the upside, also broke structure. So then if you are aggressive, you could have taken along here, because we retested this whole range demand, basically this whole zone. However, I always like to have structure in this move. So if we had structure in this move, then I would have longed. But after that, we grind it higher, higher, higher. And like this demand is still remaining. Then I took a short. And I don't advise anyone to do that. But I knew that this was super important supply because in this range we basically have this supply and this supply, and then we have the weekly high. So if we're gonna form lower highs from this high, which I still think can be our weekly high, then basically from here, my main expectation is that we lower high, from here a new lower high, or here, and then continue lower. So I knew that if we're gonna reject, then it should be from here, because price literally took out the last supply. So there was in this supply no supply left anymore, only here, which makes it a inflection point, which means that either you reject from here or you go to the next supply. So I was watching structure, and this is 30 seconds. You should not use that. But basically you can say this is your local structure, higher high, SFP of the low, higher high, higher low, higher high, SFP of your high, making the low that brought you there a weak targeted low, and then break of structure. So on this break, I took a short, stop at that high, and then target lower. And I don't know, before New York Open, I closed it. I think it was, yeah, someone during this dump, I closed it. I think around here. Because I know with New York Open, you often get volatility, like we have seen. So that was kind of the BTC price action. And what we are seeing now is just a lot of volatility, but not really tradable. I still think we go lower overall. It looks like price left some supply behind right here. That with this move, like you see this last candle before going down, leaving this little imbalance behind. This is the last supply. And price came back for it, but sold off, aka inducement. So that supply was still resting there. And now it's mitigated. It's an alert there. Maybe if it gives a retest, it can be a new short. But overall, I made good profits with the scalping. And I'm still have the short from this high right there. So from here, the only levels I'm really looking at to trade is this demand below, but this demand below and then the supply above. But overall, this is all mid-range price action because I'm still looking at this range. So often it's good to zoom out and realize where you are on the chart. Because what we see locally is super choppy price action, but we can also expect that because we are probably around the point of control. Yeah, we are stuck between point of control and the value area high. So this is a zone where you preferably don't trade too much because you can get chopped out like crazy. Now I would only trade if you see super clean models, but at the moment I don't see any of that. Clean mitigation right there. Let's quickly look at the chat. It looks strong. I want to print the move ahead. See. Now what is ETH doing right now? ETH is taking out the look. Also here, super clean price action on ETH, where you formed the range. Basically, this is your first step. So you always draw range from high to low. But this is like the first step. So you basically tap 1 at the low, tap 2 at the high, but this is your new starting point. But look, low, high, and you want to do business, you want to look for longs in discount and shorts in premium. But what do we see here? Local accumulation, move back in discount, so you can look for longs here, back to premium, 1 to model 2 distribution right there. Here, this morning, local accumulation in discount. I was looking for longs, but never got the trigger. And right now, price is back to premium. So this is where you look for shorts, not for longs. So actually clean up the chart a bit. This way, that way. Then I really like this supply. Because we have this liquidity that's now almost taken. And then an imbalance resting. So this is a high probability zone. So what I would like to see for ETH is that this is the tap 2. Maybe we come back down, come back up, tap that high probability supply, then break structure, and then have like 1, 2, 3. And if you have like sell side like there, this will be super clean. But let's see what is price locally doing. Overall, I don't like the price action on ETH too much. It's super choppy. And like BTC is choppy, but ETH is just following BTC, but then in even more choppy fashion. I would also be careful with shorting this, although at range high you can always watch for shorts. On 3 minutes we have a break of structure right here. Bearish boss. What do you leave behind? Supply. Then you can look like this. Supply is super clean. Oh, whoa, what happened there? Okay. That would have been a nice short if you got in on the break structure. But there's a reason for price to come back to retested supply. So I'm going to send an alert there. Boom. Short it. For the... Then I would quickly de-risk it. Because then you're just playing a 1-2 tapper, which is always lower probability. Because often you get your 3 tapper. But it's just a range high deviation. That's where I look for shorts. And here you can also decide to include the imbalance. So then you alert start there. BTC is probably also selling off. Yeah. Okay, back to the chat. A low time frame is coded. Make it 3 RR in 10 minutes. Enjoy it. Yeah, exactly. That's why I like low time frame a lot more. Because indeed, you can make a few R in like 10 minutes or an hour or 2 hours. Instead of making 3 R while watching in stress a whole week to your position. I've also done that. I know I'm just too impatient for that. I think I want to get action, de-risk it, take some money home, risk the profits, or just chill. Great week for you. Nice work. Yeah, this week was not nothing to complain. DD, I'm gonna find setups in fractions. Get some solid liquidity without tapping minimum trade 20 minutes. Yeah, that's the dream eventually. And I think eventually you can move more and more towards that you just only trade, for example, BTC, S&P, and gold, and only trade a window of 2 hours during New York, for example. Watch for setup, take the profits, and then run at home. So then I wanted to go over S&P because this is textbook price action. What we have been, yeah, like this chart is just a bubble like crazy, being popped up for a very long time, and eventually from low to high you can draw this range. Then this was step 1, this was step 2, this was the break. Was it also below the, yeah, so super deep move outside of the range, then a super strong move back in the range, but now it's really starting to show a lot of signs of weakness, because this is where we opened the week with a big gap, and price pushed up strongly, which it often does to take out all the shorts. And then this is where you can see what is the intent of the market maker. Does he want to...
Het is 15:31.
Oh, wait. Oh. Siri was listening. Didn't hear the thing in years, but apparently it's back on. So here you can see clearly what is the market maker doing. Is he intended to sell or is he buying? And here people are in full panic, then quick push back to clear the gaps and also to wipe out shorts. And in here, 1, 2, 3, model 1, 3 drives. This was the reason why I shorted BTC without having good structure here. No, here. Because BTC was one straight move up from the low up, while the S&P had structure. With 1, 2, 3, structure from the low up, high, high low, higher high, break of structure. So at that moment I knew this is super likely to go to the range low target, and therefore I expected BTC to do the same. No. So eventually we saw some chop right here, but eventually taking out the range low. So target was hit. And then you have to watch what is price doing. So you can always watch for price to come back from a distribution into an accumulation. Here with clean demand. So here we have tab 1. This is then potentially your tab 2. So then you extend your range to the tab 2. And then this is your deviation threshold. Meaning that any move here can still be a deviation and therefore be your model 1. However, this move was so strong that it broke below the deviation threshold, consolidated below. So that's a sign that the range is probably broken. Now you can also watch what did price leave behind with that move. Then you can see super clean supply. So that's already a sign that this range was a distribution range. And what I showed with BTC, the bullish scenario, this is the bearish, where you have range, distribution, initiation, so breakdown, mitigation, retest, initiation, continuation. So RIMC, range, move out, retest, continuation. So what was super clean to see is that we lost our deviation threshold, came back for a retest, super clean supply, protecting you draw your value area from the starting point till your breakdown point, so the point where you break out of your range, so around here. And then this is your value area low. So a lot of times, if you break out from your range, you can retest the value area low, and that is where you should see a reaction from, if you are intended to break down. So what did price do? Price broke down, did not form any clean accumulation, instead created liquidity, came back up pretty aggressively, and then here it started retesting this former range low, here the supply, and in what way? High, higher low, higher high, higher low, higher high. But is this clean structure or is this exhaustion? This is clearly exhaustion because this is the redistribution from model 1. 1, 2, 3. And that after you break out of your range to the downside is a super clean redistribution sign that market makers selling off. And then if you look closer, price breaks the range, hits the range low. And what does price do here? Is it reclaiming the range or is it doing the exact opposite, an exact replica of this? 1, 2, 3. Price takes the low, but forms a new local range. Low to high. Extend your tap. Extend your tap. 1, 2, 3. Breakdown. This was not tradable because you didn't have clean structure, but it shows the same. Like big players are selling. Breakdown. And right now the the trend has started. Because clearly big players are getting out of positions or getting into shorts. And now we retesting this key demand. We're likely to retest it more. However, on the high time frame, this looks shit. Like, let me, like, this is looking like a waterfall. And I'm very curious how this will relate to Bitcoin and the crypto, but that's why I think that this will also see a bearish week. Where's price now? Yeah, so this, the moment we break below here and then show weakness, for example, what ES did with a redistribution like that, then I'm gonna short here again, targeting all the way to the lows here. Then we have USDT around the high time frame range low, which tapped here into demand. Right now in this local range, not super clean. I'm mainly watching just the range extremes or range low and range high. But we bounced from the only remaining demand in this whole range, which was they're nuking. They're like 50-minute OBIM. Super clean, so price came into it and then bounced. And now is on its way likely to the range high again. Which means that crypto is going down. Look, we are now tapping that demand from this morning. This looks like super heavy. I'm not interested in longing this at all. I'm letting my short run. Clean up the chart. That was mitigated. We can keep that on the chart. This is mitigated. So now the only levels of true demand is resting below. So right here. And we are likely, look at those wicks. That's pure sell activity of the big players. Do we leave any fresh supply behind? Three minutes, 2 minutes. This is extreme supply. And here also some supply. Then alert there for potential shorts and around here for potential longs, but to me it looks very heavy. I have a feeling that this range will break to the downside. So then I'm super cautious with longs. And the moment we break below this low, below this range, there's nothing holding price up till a new weekly low. And then our idea of Tuesday being the high of the week is super accurate. We are leaving big wicks behind. So there is a reason for price to maybe from here squeeze up, fill some of that wick and then continue down. Potentially look for longs here, shorts here, breakdown. But it's all depending on how it develops, because it can also just nuke further down from here. Let's see where our VWAP is. Yeah, we still have weekly VWAP down there. Interesting. Let me look at the chat. Welcome to the newest Wolf of Kerala. Echoes. Not sure what you mean with it, but why didn't you short S&P 500 too? Because basically then I'm risking it double. So then I rather be, because it's super similar setup, so then I rather just choose one, take maybe a little more risk on that, than that I take risk on two, which is basically the same. Because if S&P would complete the Model 1, then BTC would also do it. So then it's basically the same trade, but then with double the size. That's not really with risk management. I got stopped out on S&P 500, was driving while the re-entry came. There was also 5 minute demand right below the breaker structure. Or can we disregard that since we have manipulation? EM group. Ah, Slatan will. Good to know that you are a EM group. I was driving while the re-entry came, but that was today, right? This distribution. Yeah, that each short would have been very good. But then you had to short it right on the first boss. So then right here. Yeah, you had to be aggressive. So normally I would not take that. I will almost always wait for at least a move into supply and then look for short there. Or look for a retest and then stop a tighter stop. It's wild that ETH actually took out the highs, because that's a new weekly high. While BTC is far from the weekly high. But a big drop right afterwards. So pure manipulation. Let me see. Als even wel re-entry came, but there was also fucking demand right below break of structure. The re-entry. You mean this demand, maybe? Yeah, like today's model was harder to trade. It was untradable. Because you had 1, this was then your 2. You didn't, if you're a really low time frame, then you get trapped here with this wick. If you look at right here, and then this was your break of structure. But the moment you have that break of structure, you also immediately go down. So then your entry likely here. But then you are also at, you have demand in it right there. And you are at your mid-range. So that's usually not the place you want to enter. So sometimes you also have distributions that are intradable. This was more of a harder one to trade. Although I now see that it perfectly tapped into supply as well. With that third tap. See from left to right, little imbalance after these candles. Then third tap mitigated that, and then strong sell-off. Okay. Learning about risk management has been my biggest problem so far. We've been doing the work. Definitely see how it is changing how I trade now. Yeah, it's something we all have to learn the hard way. I was also always way too stubborn to think about risk management. But after, you will learn it eventually, because there comes a moment that you think, yeah, okay, I should have listened from the start. But now, after way too long, I realize that truly the only way to become profitable is to have risk management, very strict risk management. So for everyone listening, thinking that is not the case for them, please listen, because otherwise you will eventually find it out, and then all the time you spend now is all wasted. So respect the risk. Then let me explain gold. Because since yesterday I was looking for that model 1 with 1, 2, and then we had like the 2 also had clean inducement. So from this high, I believe, it just front ran that demand. So then it pushed up, and I said we either can look for a model 2 right here, or better is a model 1 to mitigate this clean demand. And it's more like a 3 drive instead of a clean model 1, because this is more like slow grind down than a range where you go from high to low. But with 1, 2, 3, and then in that way down we had structure. So we had made low, lower high, lower low, but SFP. SFP means that the high that brings you there is your weak targeted high. So here, price wicked the low, came back for the high, broke structure right there internally, and then it also came down. So this is the moment where you can think, okay, on the lower time frames we already have a breaker structure, we came into demand. This is potentially the third drive. Here I want to be a little bit more aggressive with an entry. So then what you always can do from low to high, look at where are my fib levels as a little confluence. See that those are right here. And then how does price come into it? Low, lower high, lower low, lower high, SFP, retest the high, breaks above. So then technically this is your breaker structure. Right there. And then you retest local demand here and then break higher. So if you were aggressive, around here would have been your entry. And you can put your stop here, but you have 5-minute demand right below you. So I would cover that demand. And then you could target the other side of the range. However, what we have seen today is that we formed a range here. Which like had a really deep move. So I was looking for potential 1, 2, 3, but it was a bit too deep, but it took liquidity and then had a strong buyback. So a bit of tricky price action, but then it looks like price instead of accumulated had like a 1, 2 distribution and then a super strong sell-off. So a few trading opportunities, and this long would now have been stopped out. Here, this long was never triggered. This short was really hard to trade. So overall pretty clean price action, but very, very hard to trade. So how I would view it now is to, let's just look at the, get rid of everything. And I will not look at it, this local range anymore, but just back to the normal range. In which this was the range low, this was the range high, this is the deviation. So this is step 2. And then prices here retesting the mid-range level. So we are just back in the range. Rejected by the POC and the value area high. We have a gap in volume here. So what is likely is that we fill this imbalance, tap the value area low with demand, bounce there for a while to get your volume profile with the point of control in the middle. And then here look for new accumulations to eventually get that move to the range high. So alert at the high, alert at the low. And then this probably will just take some time. It's middle of the range, so not interested right here. So yeah, I think most is covered. So top rules, risk management and market structure. Yeah. Risk management by far, but it's something, yeah, it's too boring to talk about, and people, you can say they have to use it, but they won't, because I did the same. You think, yeah, right. But eventually you will learn that it's really the only way. And market structure is indeed, market structure and ranges is everything. No risk, no Lambo. That's also the case. But too much risk, and you will never have a Lambo. And probably not even a car, maybe not even a home or food. So then I rather have not a Lambo, but a house and food than risking everything on a stupid trade. Does anyone have any questions? Can quickly look at what are the stats saying for BTC today. What is the daily low and high? Daily low, daily high. Stats say that it is super likely to make a new P2. So that means that it's, given the price action, probably we're gonna take out the daily low, in which this will become RP1 and this RP2. And the weekly is still the same. So but the reaction at the range low will be super important. Oh, what happened here? Price now at the value area low, so this is not where you get bearish. But here I'm interested in new shorts. Here only in longs if it's super clean and I can de-risk quickly. And if we move into this demand, then I think that any retrace into the range is more likely to be a lower high or a bearish retest than a bullish continuation. So then I would also look for fresh shorts. To gold short but closed before news. Need to get more confident with setups. Was there news today? It could be. Then I was not sharp enough to check that. Okay, I'm gonna lastly check this. And if nobody has a question or anything, then I'm gonna wrap up the stream. Okay, quite a lot of shorts are entering. Longs a little bit, mostly shorts. We have a poor low, which is the low of this morning, which is this low right here. So there is reason for price to clear that and then get up. So that's why I think like this is truly a really important level. Either we take that low and then go up, or take it low and then just move lower. And yeah, weekly VWAP. Buyers really should step in here to defend price. Below this, the VWAP and here, and it is a super quick route all the way back to the former POC. But basically I've been waiting for either this higher POC or that lower POC, and anything in between has been super choppy. But well, it has been giving clean scalps. But yeah, lose this, and the rest of the week I'm gonna look for shorts. Do we have some 30-second fun? No. Okay, then I want to thank everyone for tuning in again. And I'm gonna close the stream. I'm gonna wait for my alerts, not in a hurry at all for fresh trades. This one would have been a nice short during the stream. But if we get a retest, this is an area to look for shorts again. For either the Model 2 or maybe the Model 1. But like looks more distributive than accumulative. Thanks guys, and see you in the Discord. Cheers.